quite as much. But give us your take.
Yeah, I mean, that was good action, came down, got support just where it should. The problem is there's, such a difference between the mega caps and the rest of the NASDAQ lately that the Qs didn't, they they touched the 10-day. So, it seems like we still need to get the Qs down a little bit. And I don't know if that's going to happen, but I think yesterday we were in the 5% range on the close above, 5.8. So it's still, it won't take much to get to that extended feeling again.
Mm-hmm. Arusha, how has this week been treating you and your portfolio?
Not very well. It's amazing. I was lightening up even last week, and so I didn't go with heavy exposure, and I still got hit. Pretty well. I mean, it's amazing how fast our stocks can move. So yeah, it's amazing how this index here is not telling the story of what's going on with a lot of our type of growth stocks. But that happens a lot. You'll see these indexes mask what's going on underneath the surface. And we, on IBD Live, it's been talked about over and over again about how you have a narrowing of stocks hitting new highs. The markets are hitting new highs, and you're just seeing more stocks not participating. And so it's a more narrowing of the rally and not a broadening of the rally. And there you go. Yep, you have the advanced decline line. So underneath the surface, there are more stocks struggling. But hey, if you push up Apple, Facebook, and the FANG stocks, that's going to carry up the Qs and kind of not tell the whole story, but or just be in those stocks right now, and you'll be happy. So that you have to just kind of pick what direction you want to go in. But if you're in some of the more traditional type of growth stocks that we're looking for, some of them were pulling back, and they were due for a pullback too, right? And it was still a normal pullback, but can be pretty brutal.
Well, Ed, just because we're seeing large cap tech taking mean that you can just buy those stocks anywhere. You still need to be disciplined, especially with the market extended. That might leave vulnerable
the market.
To a pullback.
Especially the Qs are close to extended. I mean, most of those mega caps are extended, maybe not massively so. I mean, some of them may have pulled back into buy zones, like Amazon, but that's not necessarily great strength. Apple is, I'm pretty sure, is extended from its buy zone. So you want to buy, and definitely in this market, you want to try to buy as close to buy points, whether it's an early buy point or an official buy point, buy as close as possible. Just because there is that risk of a pullback. And we definitely saw that with other stocks where stocks were looking fine and then all of a sudden they aren't. And you just have to constantly reevaluate that. It's never a good time to be buying extended, but there's no forgiving. You can't really get away with cheating in this market. You're going to get in trouble.
Well, let's check in on Fubo, Chris.
Okay.
Up about 8% right out of the gate here. Do you consider it actionable? What are you waiting for to make your decision to add this to your portfolio?
Well, I've got a trend line drawn on it, at least on Thinkorswim. It hasn't crossed it yet. It's getting pretty close. At this point, you could start a position and see how it works. I wouldn't maybe go full right now. It's also pulling back a little bit right now as we speak.
Exactly, because we've talked about buying right at the open, and especially for earnings. Earnings season is coming up. This is not an earnings related move, but we do talk about when you see a stock gapping up, you want to take a look at that intraday chart and at the very least see how that first 5-minute bar looks.
Yeah. So. Right. So, I mean, if you set your low at yesterday's low, that's probably going to be more than 10% risk. So maybe you would have to let's say it undercuts the low of today, you might have to take off some and manage your risk that way, and then wait for the ultimate test of the 50-day and yesterday's low. But it you know, it looks pretty good. I mean, that's what I like about it is the generally, you know, since the last bottom around
14.
yeah, 14. So the until the peak at 3509, you look at what are, you know, what bars are poking above the 50-day average. Well, they're all blue, and then on the pullback
For volume.
yeah, for volume. So, and then on the pullback, all those red days, and in fact all the volume was below average. So I like this one a lot.
Okay, well, we will keep tabs on it. Arusha, DocuSign had an interesting reversal, as you noted, off the 21-day line yesterday. For those who may have missed it, we did add it to Swing Trader yesterday, and Ken was talking about it on IBD Live as well in the morning, talking about how this is one he has conviction in, how Leaderboard added it on this 20% move on earnings. But anyway, if you missed it yesterday, would you be initiating a position today?
You could initiate if you like buying off pullbacks, and the 21-day is a key moving average. And a lot of times when you're in a stronger market, a lot of the best stocks will find a lot of support off the 21-day for a few months. So you could use that. You could use the low of yesterday as your exit strategy, and just respect that. Now there will be plenty of times where the market will stop you out. The market will just continue to get choppy, and you'll just be stopped out and whipped around. But you know, you have to take those chances though too, because there are times that it's going to work, and you'll be able to get into one of these faster moving stocks. I see a question here. Steve was asking about, with such poor market breadth, should we be looking for start new buys in strong relative strength names like a Docu? And that is a really great question. The reality is that a lot of times the very best stocks, and I think that Docu has the potential to be one of those very best stocks in the market if this rally continues. But a lot of times the very best stocks will only come back when the market is looking really scary. And that's what makes buying pullbacks so hard, because all of your stocks are coming in at that point. The market is on edge of cracking. And so the best stocks are coming back to key support areas. And a lot of times it might be all the way back to the 50-day. And the last thing you want to do is buy another stock, because you've lost a ton of money. And so I don't want to, a lot of times it's very hard for me to do that. And then there you go, they take off again. And you look back a couple of months later doing your pulse analysis, like, why didn't I buy Docu off the 10-week or whatever, or one of the best stocks off the time? So the markets are never going to make it easy, and the very best stocks will only come back when the market is pulling back pretty hard. So you just have to kind of balance that. I'm not very good at it, but that is the reality. If you want to try to get some of these stocks on pullbacks, you're going to be buying when the market is on edge of taking maybe even a more of a leg lower.
You know,
and you feel like, go ahead.
Well, I think the way to handle that is if you're being very selective in your buying. If you're just like today, you're going out and like buying everything. You've got Fubo and this and that and that. That's where you can get into trouble when you buy too aggressively. But if you're very focused and saying, okay, I really want to try to find a place to get into DocuSign. So yeah, it might not work, but it's not going to be a portfolio killing loss, especially if it's you're being careful and trying to buy the very best when it's setting up. So I think it's a matter of picking your battles.
Yeah, I mean, it's the same approach that I'll use like for earnings gaps. I'm not going to use those buy an earnings gap for every stock. It's only for that 1% of the stocks that I think are the best stocks in the market, and I don't want to lose them. And Docu honestly is one of those examples where I just didn't buy it because I didn't think it was going to do that. But Docu has that huge potential with the huge earnings and sales. it provided that earnings gap. And this is even a little trickier because it's not even breaking out at this point. But those kind of earnings gaps, I'll try that. And so same thing with the pullback, I'm trying to shift my mentality to get comfortable buying more of those kind of pullbacks when they are when only the very best stocks are coming into key support areas. And because that way I think it's worth